and the financial information of the components which are part of the group entity. Now, what is component? A component can be a division, a branch, or subsidiary, or a joint venture, or an associated enterprises, or an other entity whose financial information is going to be part of the financial information of the group entity as a whole. For example, Reliance Industries Limited is a parent entity, and Reliance Capital or Reliance Communication is a component. Moving on to SS 600. What is the main responsibility of the auditor in SS 600? The auditor remains responsible for forming and expressing an opinion on financial information even when delegating tasks or using work from the other auditors. Auditors can rely on the work performed by the assistants, other auditors, or experts provided they exercise adequate skill and are quite sure that the person has the relevant competencies and capabilities to carry out the task. Moving on to the next slide, what is the purpose of this standard? SC 600. The standard of auditing aims to establish guidelines for the auditors when reporting on the financial information so that a standardization may be achieved between the works of other auditors as well. What is the role of the principal auditor? As we covered in the next slide. Slide show. Yes, sir. The principal auditor, as we saw in the previous slides, is responsible for reporting on the financial information of the entity, which includes using the work of the another auditor, auditing the components. Involvement of other auditors. This standard outlines the condition under which the principal auditor can rely on the work of other auditors regarding the specific component. So basically, the principal auditor has to carry out some additional audit procedures in addition to the general audit procedures that he has to carry while auditing the principal entity. Principal auditor's responsibility. This standard also discusses the responsibilities of the principal auditor in relation to the use of the other auditor's work. Definition of financial information in the standard. In this context, financial information includes financial statements as a key element. Moving on to the next slide.
भाई ऐसे तो अगले 5 मिनट में क्लास ही खत्म हो
बेसिकली था अभी तक तो
एक्सप्लेन जरूर कर देना नहीं तो किसी को समझ नहीं आएगा बोले आज क्या हो गया
Before moving in and talking about what the standard includes, let's specifically talk about what the standard exclusively excludes from it. First, the joint auditors. This standard does not address situations where two or more persons are appointed to audit the same entity. The majorly the divisions which are part of the entity may be audited by one or more auditors, which is covered in SA 299. So this SA 600 does not cover the same. Second, predecessor auditor relationship. The standard does not discuss the auditor's relationship with the predecessor auditor, which is contained in SA 300, which talks about planning. Third, immaterial components. When the principal auditor determines that a component's financial information is immaterial, the procedures outlined in the standard do not apply. For this, the auditor has to exercise his professional judgment and also the SA 320, the procedures which are outlined in SA 320 to determine whether the information of the components is material or not and whether it will have a significant impact on the financial information of the principal entity as a whole. Fourth point, materiality of the combined components. If several components, while individually immaterial, are collectively material to the entity's overall financial information, the procedure in the standard should be considered. Now, this is not a specific exclusion, this is an inclusion. The standard does not exclude this. There may be several components in the parent entity which may be individually immaterial, but when combined or seen as a group as a whole, they will be material to the parent entity. Moving on. Acceptance as a principal auditor. What are the factors that are needed to be considered by the principal auditor before accepting his engagement as the principal auditors? These are general guidelines which are also outlined in SA 210, which says about preliminary audit engagements. Consideration of participation. The auditor must evaluate if his participation is adequate to serve as the principal auditor and is also sufficient, like whether he requires another auditor to audit the principal entity if the entity is big enough. Secondly, materiality assessment. Assessing the materiality of the portion of the financial information which the principal auditor is auditing himself. As set out in SA 320, knowledge of the business. Now, these 2 points, knowledge of the business and risk evaluation, are derived from SA 315, which talks about understanding the entity and performing risk assessment procedures for the same. Evaluating the principal auditor's degree of knowledge regarding the business of the components involved. For example, evaluate principal auditor's knowledge regarding business of the components. This is a reference from SA 305. Risk evaluation. Considering the risk of material misstatements in the financial information of components which are audited by the other auditors. We can do it so by performing the risk assessment procedures as outlined in the SA 315. Performing additional procedures. Performing additional procedures as outlined in this essay concerning components audited by the other auditor to ensure significant partition. The auditors, in relation to the general audit procedures, should also perform some additional procedure to have sufficient and appropriate audit evidence to be pretty sure about the work that is to be used of the other auditors which have audited the component before including it in his own audit report. Moving on to the next slide. What are the procedures that are required to be performed by the principal auditor before using the work of the another auditor? Let's talk about principal auditor's rights. The statute governing the entity may grant the principal auditor the right to visit a component and examine its books and accounts and record whenever deemed necessary. This point is quite self-explanatory. Whenever the principal auditor determines that a visit is needed to the component's place of business, he may do so. Reliance on component auditor. In case where another auditor is appointed for the component, the principal auditor typically relies on the work of that auditor after performing additional procedures for the same. Special circumstances. This point is similar as before. If any special circumstances arise during the course of the audit, the principal auditor may determine the need to visit the place of the business of the other component which the other auditor is auditing. Assessing the other auditor's competence. When planning to use the work of another auditor, the principal auditor should evaluate the professional competence of the other auditor in relation to specific assignment, particularly if the auditor is not a member of the Institute of Chartered Accountants of India. The principal auditor should evaluate the competence if the other auditor is a CA as well. This point is typically misunderstood by some of the auditors that they need to not perform the additional procedures which require them to assess the professional competence of the person, even if he is a member of ICA while using his work. But he is also required to do the same. But the standard specifically states that he should carry out the procedure if he is not a member of ICA. What are the principal auditor's responsibilities? As we have seen in previous slides and as discussed before, the principal auditor must perform procedures to obtain sufficient and appropriate audit evidence regarding the adequacy of the other auditor's work for the specific assignment. Reviewing other auditors' procedures. First of all, discussion of audit procedures. The principal auditor may discuss with the other auditor what were the procedures that were performed by the other auditor while he was performing the audit of the component. Second, review of written summary. Written summary of other auditors' procedures and findings, potentially in the form of a complete questionnaire or checklist, may be reviewed. The principal auditor may require the other auditor to fill out a questionnaire or a detailed checklist. Possibility of visits, as we discussed in the previous slides, the principal auditor has every right to visit the place of the business of the component. Determining audit procedures. The nature, timing, and extent of the audit procedures will depend on the engagement's specific circumstances. Knowledge of competence. As discussed in the previous slide, the principal auditor's knowledge of the other auditor's professional competence can influence the review process. Like if the principal auditor determines that the other auditor has sufficient professional competence, he may not require detailed procedures to review his work. Previous audit work review. The principal auditor can also gain knowledge about the work of the other auditor by reviewing his previous audit works. Quality control consideration of other auditors' works. Conclusion on procedure. The principal auditor may find it unnecessary to apply additional procedures if sufficient and appropriate audit evidence confirms compliance with acceptable quality control procedures and procedures from previous audits. If the principal auditor has already obtained sufficient audit evidence that the work of the other auditor complies with the relevant quality control considerations and also complies with the relevant standards of quality control like SKC1, he may not require to perform some additional procedures as well. Consideration of findings. The principal auditor should take into account the significant findings reported by the other auditor while preparing his own report as well. Discussion and supplemental tests. Discussion with the other auditor and the management as well. The principal auditor may find it necessary to discuss audit findings or other matters with the other auditor and the management of the component. Wherever any significant matter is reported by the other auditor to the principal auditor or to the management, the principal auditor may determine the need to discuss it with the management or with the other auditor or with both. Consideration of supplemental tests. Supplemental tests are kind of the additional procedures that the principal auditor may perform. The principal auditor may determine that supplemental tests of records or financial statements are necessary depending on the circumstances. Responsibility for tests. Such supplemental tests may be performed either by the principal auditor or by the other auditor or by both based on the situation. Use of non-qualified auditors. Non-qualified auditors may be appointed by the components, majorly in areas where there are foreign components of an entity. Applicable laws in some jurisdictions allow individuals other than professionally qualified auditors under audits. This does not happen in India frequently. Documentation requirement. These are some of the general documentation requirements, which is also outlined in SA 230, which talks about audit documentation. First is documentation of the components. Principal auditor must document the components whose financial information was audited by the other auditors, including their significance to the overall financial information of the entity. The significance may be determined by the principal auditor in conformity with the SA 320, which talks about materiality. Identification of the other auditors. It is essential to record the names of the other auditors involved in the audit process so that clear accountability can be established regarding the work. Materiality conclusions. Document any conclusions reached regarding the materiality of the individual components in relation to the financial information. The procedures performed by the principal auditor regarding his own audit, the procedures performed by the other auditor regarding the audit of the components, and the additional procedures performed by the principal auditor determining whether the work of the other auditor is to be used. They need to be documented as well. Documenting discussions. Any discussions that were being held by the principal auditor with the other auditors or with the management or with any other third party need to be documented. Limiting procedure, limiting procedure documentation. The reasons for limiting procedures do not need to be documented is summarized elsewhere in the principal auditor's documentation. Like if any auditor determines that there is not a need to perform additional procedures and the reasons for the same are summarized elsewhere in the audit evidence, he may need not record it again. Handling other auditors report. If the other auditor's report is not unmodified, if it is modified, the principal auditor must document how the qualification or adverse remarks in his report affect the remarks that are addressed in his own report. Moving on to the next slide, talks about coordination between the auditors. First point talks about sufficient licensing is required between the principal auditor and the other auditor. There should be sufficient licensing between the principal auditor and the other auditor to ensure effective communication and smooth flow of information. highlight significant findings. The other auditor should promptly bring significant findings to the principal auditor's attention, especially those requiring entity level actions. Written communication. The principal auditors may need to issue written communications to other auditors to facilitate coordination and also to be part of the audit documentation. Adherence to timetable. The other auditor must adhere to the agreed upon timetable for the audit of the component. The other auditor must understand the context in which their work will be utilized by the principal auditor and must perform the required procedures. Compliance with statutory requirements. The other auditor should ensure compliance with relevant statutory requirements throughout the audit process. Use of modified reports. Requirement of a detailed questionnaire, as we have already discussed in the previous slides. The principal auditor may require the other auditor to answer a detailed questionnaire to gather necessary information for fulfilling his duties. Timely responses from the auditor. It is the responsibility to other auditor to timely fill the questionnaire or the checklist which was given to him by the principal auditor. Limitations on scope of audit. If the principal auditor determines that the work of the other auditor cannot be utilized and sufficient additional procedures cannot be performed, a qualified opinion or disclaimer of opinion should be expressed. After performing the procedures which are outlined in this essay, the auditor determines that the work of the other auditor cannot be used. He should express a qualified opinion or a disclaimer of opinion in his audit report as well. In all circumstances, if the other auditor issues or intends to issue a modified auditor's report, the principal auditor should consider whether the subject of the modification is of such nature and significance that it requires a modification in the principal auditor's report. And if the principal auditor does not modify his report should contain a reference indicating the other auditor's report and the areas in which the modification was done. Division of responsibility between the principal auditor and the other auditor. The principal auditor is not responsible for the work of the other auditors unless there are circumstances that raise suspicion about the reliability of the work. This is the point in which NFRA has also highlighted in its latest circular, which will be covered later in the class by the two co-presenters of us. Relying on other auditors. When the principal auditor bases their opinion on the financial information of the entire entity, using reports from the other auditors, transparency about the reliance is also essential. Reporting division of responsibility. The principal auditor's report must clearly indicate the division of responsibility regarding the financial information, detailing the extent of the components that are audited by the other auditors. It must also contain a reference of the other auditor's report if there is a modification in it, so that clear accountability can be established regarding the work performed. Inclusion of components. The report should specify the number of divisions, the branches, the subsidiaries, or other components that have been audited by other auditors and included in the financial information. Effective date of the standard. This standard this standard became operative for all audits relating to audit period beginning from April 1, 2018, which was revised. Compatibility with ISO 600. ISO 600 clearly states that the auditing standards and the guidelines issued in these standards are very closely related to ISO 600, which was issued by the IAASB International Auditing and Accounting Standard Board, which talks about group audit. Comparative analysis of SS 600 and ISS 600, understanding the key differences and implications for auditors, which is also covered by NFRA in its latest circular, which is dated 3rd of October, which will be covered later in the class. Group audit requirements. SS 600. SS 600 maintains strict adherence to Indian accounting standards only. It requires comprehensive documentation for audit processes. It focuses on local regulation and compliance in India only. It emphasizes the importance of regional auditing practices and the regional auditing standards issued by ICAI. It ensures audit reflects the specific legal framework of India, including various acts such as Companies Act, LLPs Act, Income Tax Act, and the GST Act as well. It promotes accountability in local audits only and encourages detailed reporting tailored to Indian stakeholders only. Whereas ISS 600 advocates for a consistent auditing approach globally so that a relevant standard can be maintained between the audit work done globally. It ensures quality control across international audits, focuses on harmonizing auditing standards across jurisdictions. It encourages collaboration among other auditors worldwide by establishing a relevant standard of work. It promotes the application of global best practices, facilitates cross-border audits with uniform standards, and aims to standardize the reporting and compliance internationally. Moving on to the next slide, what are the key differences between SS600 and ISS 600? As the essay clearly states that it is very closely related to ISS 600, there are not much differences between the two. But let's analyze what are the key differences between both of them. Scope of application. SS 600 focuses on domestic audits only, while ISS 600 applies internationally. What are the auditor's responsibilities in both the essays? SA 600 outlines specific local auditor duties, including compliance with the local regulatory framework. ISS 600 provides broader global responsibilities, ensuring compliance with the global laws. Reporting standards. The differences in reporting requirements can affect audit outcomes between the two standards. Regulatory compliance. SA 600 is tailored to comply with local regulations only, as we um, saw in the previous slides, whereas ISS 600 aligns with the international norms, which are issued by the IAASB. Risk assessment. SS 600 emphasizes local risk factors, while ISS 600 addresses a wider range of risks. These are the references from which I prepared my PPT from the IAASB publications and also the ICI guidelines. Thanks so much for your time, and now I'll.
स्पीच खत्म होने की तरह है क्या?
Thank you, Dash. Now, after understanding that what SS 600 and ISS 600 said, one must now clearly understand that what the conflict is. Basically, NFRA and ICI are at the odds over the proposed changes in the domestic standards in order to align them with the global norms.
Thank you.
Basically, the ISO 600, which is the global norm, it states that the principal auditor has the overall responsibility to certify the financial statements, that the financial statements present true and fairly. However, in India, the auditors prefer SS 600, and as per SS 600, they have the shared responsibility with the component auditors. So basically, what's happening is the component auditors preparing the financial statements, and as per that, it is issuing its audit report. And now the principal auditor audits the HOs and it prepares the audit report accordingly and refers the work of component auditors in it. Now, when NFRA reviewed the financial statements as a whole, they found that there is a gross negligence and non-compliance with the statutory provisions, specifically Companies Act 2013. In the review, they found that a lot of money was diverted or siphoned off inappropriately from the associates and the subsidiaries to the parent entities or among the associates and subsidiaries. Now, moving on to our presentation, NFRA and ICI are at the odds. I have already explained that. And NFRA has expressed the concerns about the issues of the gross negligence and audit failures in the context of the group financial audits. Now, component auditors' role. Component auditor is basically the person who audits the subsidiaries accounts, while the principal auditor is the person who audits the HOs. Now, NFRA's findings and concerns. Findings of the NFRA. NFRA scrutinized the financial statements and have identified the gross negligence at the group level. Identified companies. Here, the NFRA in its circular identified some of the companies such as Reliance Capital, DHFL, Coffee Enterprises Limited, in which lot of money is being diverted and siphoned off inappropriately, that is in the contravention of Companies Act 2013. Now moving on to our next slide. In its circular, the NFRA mentioned that about tens of thousands of crore rupees has been inappropriately diverted, contravening the provisions of the Companies Act. Now, NFRA's recommendation in its circular. NFRA recommends that the group financial statements must be properly reviewed by the principal auditor rather than just referring the work of the component auditor and getting relieved from their duty. Second is the responsibility of the principal auditor is to ensure the accuracy and the reliability of the complete financial statements rather than just the HO part. Objective of the auditor, as per SC 200, it is the objective of the auditor to provide the reasonable assurance that the financial statements as a whole are free from material misstatements. But what's happening is the principal auditor is just giving the opinion on its part, so it is not completely covering the financial statements and they are just referring the work of component auditors. Materiality in the financial statements. The opinion expressed by the auditor is based on the materiality of the financial statements, highlighting the importance of accurate reporting. Now, what is the ICI's arguments against the NFRA circular? Now, here the ICI is of the view that since all the component auditors and the principal auditors undergo the same level of education, same level of training, and the same licensing requirements, then why the principal auditor should review the work of component auditor, as it will just lead to the duplication of the work and the waste of time. Also, the ICI is also of the view that the concentration of the work will also occur. That is, when the principal auditors will review the work of the component auditors, then the principal auditors will be in such a position that they will hurt the independence of the component auditors and the impact on the smaller firms. This concentration may disadvantage the mid-size and the small audit firms. Now, the impact on the smaller audit firms. This could empower the principal auditors, who are often from the large firms, to significantly influence the corporate management decisions. This influence may lead to the potential replacement of the component auditors, who are typically the smaller firms, by the principal auditors. Now, what's the ICI's consideration of the proposal? So, however, the ICI is not completely against the motion. ICI said that they will definitely discuss the circular in their next council meeting. Now, let's discuss in detail that what the NFRA circular is. The NFRA issued a circular for the detailed understanding of audit practices related to the financial statements. It covers both consolidated financial statements as well as standalone financial statements. The audit of the group financial statements requires a special consideration by the auditors. SS 600, using the work of the another auditor, outlines the requirement for auditing the group financial statements. Now, here is the analysis of the alleged financial fraud cases, which was mentioned by the NFRA in its circular. NFRA in its circular mentioned that about 29,000 of the crore rupees of the money diversion was there in the Reliance family companies, such as Reliance Capital Limited, Reliance Home Finance Limited, Reliance Commercial Finance Limited. About 3,500 crore rupees of the money diversion was there in Coffee Day Enterprises Limited, around 34,000 crores in Diwan Housing Finance Limited, and around 90,000 crore rupees with respect to the staggered debts in case of INS. Now, what is the impact of the fraud on the financial and the capital markets? The combined effect of the fraud has resulted in a loss of tens of thousands of crore rupees in the financial and the capital markets. Investors, including the retail investors, have been adversely affected by these financial cases. The situation involves huge public interest, highlighting the broader implication of the fraud in these markets. Now, audit risk in the group financial statements. Now, NFRA has outlined that why such audit risks have occurred in the group financial statements. First, the complex group structures. The audit risk arises due to the complex group structures, including special purpose vehicles, autopilot structures, cross-holding of the interest in the holding and subsidiary entities, that is group entities, and the shared service center in the different geographies. We'll understand more with regard to the shared service center in the different geographies in our upcoming slides. Next is that there is a risk associated with the use of shell and the dummy companies, which might be created or which might be used for siphoning of the funds. Regular or frequent information or acquisition of the new business and the entities, including the schemes of mergers and demergers. Next, transaction with the related parties. Transactions outside the normal course of business. The significant transactions occurring outside the normal course of business can lead to the increased scrutiny and the potential risks. Unusual or abnormal variances in the financial data can indicate underlying issues and elevate the audit risk. And also, the rapid technological development can also result in the siphoning and diverting the funds in an inappropriate manner. NFRA's observation on the audit. Inadequate coordination. The NFRA has observed that this has occurred majorly because of the inadequate coordination between the principal auditor and the component auditor. Basically, the principal auditor do not even communicate with the component auditor in this regard, and they just refer their report. So here is one of the major issues which the NFRA has highlighted, that the principal auditors must communicate with the component auditors as well. Second, the management's inclusion of the unaudited financial statements of some component in the consolidated financial statement was not properly assessed. The principal auditor indicated that the preparation of consolidated financial statements using the unaudited financial statements of subsidiaries is pure the choice of the company. The principal auditor's approach contradicted the objective of consolidated financial statements as per the standards on auditing, which is to express an opinion on the compliance with applicable financial reporting framework. Issues in fraud reporting by the auditors. The principal auditor indicated that they had no obligation to evaluate the fraud risk in any of the group companies. This has basically occurred due to the misinterpretation of the SS 600, which will be discussed in the upcoming slides. The principal auditor noted that there is no access to the books of the subsidiaries audited by the component auditor. So they are saying that they cannot audit the subsidiaries books also because they do not have the access to those subsidiary books. Now let us understand one of the case study which was mentioned by the NFRA in its circular with respect to the revenue discrepancies. The NFRA has, however, not disclosed the name of the company in which it has occurred. The NFRA has said that around 100% of the revenue the company has earned the company has earned about 100% of the revenue from an overseas branch. The principal auditor of that company is in India. The component of the auditor of that company is in country B, that is not even in the country in which the branch was located. And when the group financial statements were formed, in group financial statements, the principal auditor said that the company is in software business. But when the group financial statements were formed, and the NFRA, who is responsible for reviewing the public interested company's corporate financials, they identified that the company's main income is from construction business. Next is the challenges in respect of non-banking financing companies. The NFRA has also mentioned in respect of the non-banking financing companies that a substantial amount of around 29,000 crore has been inappropriately diverted, involving the both group companies and undisclosed related parties. And around 29,000 crore of the amount which was siphoned off inappropriately was from the 6 subsidiaries of the NBFC, which share about 38.64% of the total assets of the complete NBFC group. Now let us understand that what is the incorrect interpretation by some auditors in the application of existing provisions of SS 600. That why such issue has been occurred and what is the content of the principal auditors and why they are not reviewing the component auditors' financials. So financials audited by the component auditors. So here are some of the instances that what is being mentioned in SS 600. SS 600 mentions that the auditors should evaluate their own participation to ensure they act as a principal auditor. SS 600 outlines that the principal auditor should determine the impact of another auditor's work on their work, and the principal auditor should perform necessary procedures to obtain adequate audit evidences regarding another auditor's work. Now here, since should was used around 20 plus times and the shall was not even used once, so the principal auditors are of the view that this essay is discretionary in nature rather than being mandatory in nature. So with respect to this, the component auditors contend that due to such discretionary nature, they are just not complying with it, and they are just taking it as a discretionary, or they are not complying with this. Now let us understand the judicial interpretation of the should and the auditing standards. Now the NFRA in its circular has also mentioned the interpretation of the should by the various judicial authorities, including the Supreme Court's judgment. In one of the judgment of the Honorable Supreme Court said that one should not use the word shall or should as just if it is mentioned as should, you cannot take it as a discretionary. You also have to understand that what is the intent of that standard or what is the intent of that law. Here, the Supreme Court said that the compliance with the auditing standards is mandatory. Despite the word used, the interpretation underscores that the adherence of the auditing standards is not discretionary in nature. Now let us understand that what are the consequences of such misinterpretation. Considering the provisions of SS 600 as directory can lead to the fundamental misunderstanding of the audit processes. Misunderstanding may result in inadequate evidence gathering during the course of the audit. There is a heightened risk of non-compliance, which was also highlighted by the NFRA, that is, with respect to the Companies Act 2013. Now, understanding the authority of SS 600 in the context of SA 200. SA 200 basically specified that there is overall, which specifies the overall objectives of the auditor, that the auditors have to obtain the reasonable assurance that the financial statements as a whole provide the opinion that the financial statements as a whole are free from material misstatements, whether due to fraud or error. So NFRA here says that even though you got misinterpreted by SA 600, then also you should have to comply with SA 200, because SA 200 specifies the overall objectives of the auditor and SA 200 prevails over all of the essays of the auditing. So here the NFRA says that you must have complied with the SA provision, even though you are not complying with SA 600, you should have complied with SA 200 and should have commented on the complete financial statements rather than just referring the work of component auditors. Here's the same one. The component principal auditors cannot argue that the inadequate procedures are performed due to the perception of the specific SA's requirement. The requirement for the audit procedures are universally applicable to the audit, that is with respect to SA 200, whether they are standalone or consolidated. Now linking SA with SA 315. SA 315 is basically identifying and assessing the risk of material misstatement and obtaining the understanding of the entity and its environment. So here also NFRA contends that okay, you have misinterpreted by SA 600, but you should have obtained the complete understanding of the entity before certifying the financial statements before certifying the group financial statements. You cannot just refer the work of the component auditors in this regard. The principal auditors must evaluate their own participation to determine if it is adequate for acting as a principal auditor. The principal auditor must consider the risk of material misstatements in the financial information of the components audited by the other auditors. The auditor is expected to apply the requirements of SA 315, particularly in identifying and assessing the risk of material misstatements. The auditor should not rely blindly on the work performed by the component auditors. SA 600 emphasizes that reliance on the company's auditor on the component auditors work requires a professional assessment and not a mechanical adoption. The auditor must document their decisions regarding the reliance on the component auditor's work. Now, what are the expectations from the auditors regarding the SA 315? Here, the NFRA has some of the expectations with the auditors with respect to SA 315. The auditors must apply the requirements of SA 315 to identify and assess the risk of material of SA 315, including the considerations on the paragraph 11 and the related application paragraph 829. And the auditor should not blindly rely on the work done by the component auditors. They must also independently assess the risk. Now, implication of non-compliance with the Companies Act 2013. The NFRA has also mentioned some of the implications of the non-compliance with the Companies Act 2013 in its circular. The legal and professional repercussions, failure to comply with the provisions of SA 600 can result in the significant legal and the professional repercussions under the section 143 of the Companies Act 2013, affecting the integrity of the audit, ensuring the reliability in the audit procedures. Auditors are required to exercise the professional judgment in accordance with the auditing standards, which is crucial for ensuring the reliability and the credibility of the audit procedures. And third, for comprehensive audit approach. The comprehensive audit approach uses the integration of the various auditing standards, including SA 200, SA 600, and SA 315, to achieve the consistent and effect. Now, here's the conclusion of the interpretation challenges in the auditing. The challenges in interpreting auditing standards, particularly the distinction between shall and should, play a significant role in the auditing process. There is a crucial need for the clarity in the auditing standards to ensure that the auditors fully understand the requirements, and the strict adherence to the mandatory procedures is essential to enhance the quality and compliance of the audit. Now I request Suhani to take on.
Thank you so much, Suyash. So I'll be taking forward the circular. Basically, in the recent decisions of High Court of Bombay, there were several tests to determine whether the provision is mandatory or discretionary. We will discuss few of the cases. Basically, the use of expression shall, should, or must indicates mandatory nature, while may or nearly as may be suggest directory nature. Consequences of breach. If a statute provides consequences for breach or non-compliance, this typically suggests that the provision is mandatory. If provision is expressed in a negative form, generally indicates a mandatory nature. If there are any procedural rules, they are not constructed as mandatory. Moving on to the next slide, any concession or privilege that has been prescribed by the statute must be followed. So that is mandatory in nature. If when a provision requires an act to be done in a specific manner for a right to be acquired, it is considered mandatory, especially when linked with immunity. Privilege, duties and obligations. Provisions imposing duties on private parties and are generally deemed to be mandatory in nature. Statutory exceptions or concessions must be fulfilled according to prescribed conditions, otherwise they are not valid. So they are also mandatory in nature. So basically, we have discussed that what are the tests to determine whether a provision is mandatory or directory. Let us link it with S600 to understand in a better way. The user word should in SS600 does not provide auditors with the discretion to selectively apply required determination of procedures. Auditors are required to comply with SS600 and related provisions concerning the audit of group financial statements. If auditor does not comply with SS600, they must record reasons for doing so and provide documentation in their audit files. Auditor must demonstrate that alternative actions taken are sufficient if taken to achieve the objectives of the specific auditing engagement. Now we have considered the interpretation of whether the provision is mandatory or direct. We have linked it with the SA 600 and considered its interpretation too. Now we are moving forward to global considerations about auditors' obligations. So there are similar considerations regarding auditor obligations and the standards of auditing, which are applicable worldwide. Basically, the Public Company Accounting Oversight Board, PCAOB, in USA has issued Rule 3101 detailing specific terms used in auditing. The terms Rule 3101 indicates that shall indicates unconditional response as per the rules, should implies responsibility that are presumptively mandatory. So, as far as it goes with the High Court's tests, it also it is also in line with the same. Auditors must comply with specified requirements unless they demonstrate that alternative actions achieve the standards objectively. Failing to meet a presumptively mandatory responsibility constitutes a violation of relevant standards and rules If an auditor believes objectives can be made through alternative means, they must document this during planning and performance. The PCAOB notes that alternative means to meet standard objectives should be documented only in a rare circumstances. So the global guidelines and what SA says are similar. Let us understand what SEBI has described us regarding the same. The principal auditor's obligation towards group financial statements are emphasized in SEBI's master circular, which highlights the need for compliance with the SEBI LODR regulations 2015. The consolidation of accounts must adhere the applicable accounting standards, especially AS 21 or Ind AS 110, whichever is applicable. The circular mandates that the statutory auditor of a listed entity must perform a limited review on the audits of all entities or companies whose accounts are to be consolidated with the listed entity. Now some auditors have expressed to NFRA that they believe that there is a barrier preventing the review of component auditors' work papers. Let us understand this in a better way. तो basically कुछ ऑडिटर्स ने ऐसा कंसर्न रेज किया कि हम लोग प्रिंसिपल ऑडिटर्स कंपोनेंट ऑडिटर्स का वर्क पेपर्स यूज नहीं कर सकते, उनको एक्सेस नहीं ले सकते, क्योंकि इसकी वजह से हमारा प्रोफेशनल मिसकंडक्ट में हम गिल्टी हो रहे हैं. Basically, clause 1 of schedule 2 of Chartered Accountants Act 1949 says that Chartered accountant in practice is deemed to be guilty of professional misconduct for disclosing confidential information acquired during professional engagements without client's consent. So, इससे क्या हो रहा है? The clause emphasizes that importance of maintaining confidentiality and outlines the circumstance under which information can be disclosed. So the NFRA has given us clarity regarding the same. NFRA has to say that there is no bar on sharing work papers. This clause does not prohibit the sharing of work papers between the principal auditor and a component auditor. Component auditors are allowed to share work papers with the principal auditors, and it is necessary for the principal auditor's duties. Basically, the sharing of work papers is required as per Companies Act 2013 under Section 143, which is Companies Audit. And also, the Chartered Accountancy Act has been framed in such a way that it states that a chartered accountant in practice can be deemed guilty of professional misconduct for disclosing confidential information acquired during professional engagement without client's consent. But if it is required by any other law for timing, one can share the confidential information. Obligations under Section 143 of Companies Act 2013. So actually क्या हुआ कि NFRA ने clarification दिया कि ये professional misconduct में नहीं आएगा, क्योंकि as per Companies Act it is required by a principal auditor to get the work papers of component auditors. तो अब अपन Companies Act के कुछ provisions discuss करने जा रहे हैं, which states the same that a principal auditor is required to get the work of component auditors. Basically, the principal auditor has a right to access to company's record as well as its subsidiaries' records, and any information and explanation required by him. And secondly, it is auditor's responsibility to report to the members of the company on the accounts examined of principal entity as well as its group financial statements. The report covers every financial statements required by the Act to be presented at the general meeting. The auditor must consider the provisions of Companies Act, accounting and auditing standards, and required matters in the audit report. The auditor's report must confirm that the financial statements provide a true and fair view of company's affairs. It should disclose profit and loss profit and loss accounts, and cash flow reporting. Here we are going to discuss auditors' duties regarding the audit of consolidated financial statements. The auditor must state whether he has obtained all the necessary information and explanations for the audit. The auditor must express an opinion on whether proper books of accounts have been maintained as required by law based on his examination. Auditor needs to confirm if the report from any branch audited by another auditor has been received and how it has considered in his report. The auditor must verify if the company's balance sheet and profit and loss account are consistent with the books of accounts and returns. It is essential for the auditor to express whether the financial statements comply with the relevant accounting standards. The report should include any observations or comments regarding financial transactions that adversely affect the company's functioning. Auditor must state if there is if any director is disqualified in the Companies Act, and the auditor needs to assess whether the company has an adequate internal financial control system in place and its operating effectiveness. Going further, let us conclude with what are the principal auditor's responsibility as per SS 600, as well explained by Darsh. Audit evidence requirements. SS 600 mandates that the principal auditor perform procedures to obtain sufficient and appropriate audit evidence. Assessment of other auditors' work. The principal auditor must evaluate whether the work of other auditor is adequate for the principal auditor's purpose within the specified assignment context. Impact of other auditors' work. SS 600 requires the principal auditor to determine whether how the work of other auditor will impact the overall audit. In this slide, there's an interpretation of SS 600, review of audit work papers. This has been explained by Darsh before. This is a conclusive slide, sharing of work papers and the legal considerations for the same. The principal auditors review of audit work papers from component auditors or other auditor aligned with SEBI's LODR obligations. Component auditors are permitted to share work papers with principal auditors in accordance with Companies Act. Sharing of work papers is not hindered by the provisions of Chartered Accountants Act 1949, as explained before, as it is essential for principal auditors' lawful duties. Now, the next topic is evaluating professional competence of other auditor. Consideration of professional competence. When planning to use other auditors' work, the principal auditors must evaluate the professional competence of other auditor, particularly if they are not a member of ICI. Basically, अगर कोई ICI का member नहीं है, तो उसकी professional competence तो देखना mandatory है ही है. पर अगर कोई ICI का member है, so the provision does not restrict the principal auditor from considering the competence of the other auditor, even if they are a member of ICI. Basically, the nature, timing, and extent of principal auditors depend upon the professional competence of other auditors. In this slide, we'll understand the professional competence is beyond certification. Definition of professional competence. We have gone through that. Misinterpretation of competence. The term knowledge of professional competence should not be interpreted as just validating an auditor's certification status. Lack of parallel in other professions. No other profession equates the possession of a degree with professional competence in such a simplistic manner. For considering professional competence of other auditor, we should also see the experience of the auditor, scale and sectors they have audited before, complexity of the assignment, and resources which are available to them. Let us understand how professional competence affects our overall audit. Basically, the assessment aids the principal auditor in evaluating the work of other auditors, and it also helps in determining the extent to which sufficient and appropriate audit evidence is available. This is a conclusive slide. Responsibility of principal auditors.
सारी कंक्लूजन लगे थे क्या पता है कि सारी
Selective reading of provisions. Conclusive slide of the previous topic I have explained. Some auditors engage in a selective reading and interpretation of existing provisions in SS 800. This selective approach does not align with the overall purpose and objective of the audit. So the actions described are not in the agreement with standards. The practices noted also inconsistent with the provisions of 2013. Such selective reading is not in public interest, and it is management, board of directors, and principal auditors' responsibility for ensuring compliance of the standards of audit and accounting standards and Companies Act. Now we will understand the procedure of approval of financial statements in under Companies Act 2013. Financial statements must be approved by the director. The chairperson is authorized by the board along with two directors, the CEO, CFO, and company secretary sign. The approval process also includes CFS if applicable. The provisions indicates that the responsibility for consolidated financial statements lies with the holding or parent company. Responsibilities under Section 129 of Companies Act 2013.
Yeah.
Section 129(4) of Companies Act 2013 stipulates that provisions of this act regarding the preparation, adoption, and audit of financial statements for holding companies also applies to consolidated financial statements. So basically, जो भी Companies Act के सारे provisions है regarding preparation, adoption and audit of financial statements, ये सारे CFS में भी applicable है. तो इसलिए ये जो principal auditor है, उसकी responsibility बनती है कि Companies Act को भी ध्यान रखे while making group financial statements. The responsibilities of the management of holding entity regarding financial statements are clearly defined in the law. The auditors of the holding entity also have unambiguous responsibilities as per the provisions of Section 129(4) of Companies Act 2013. So basically, the auditor's responsibilities under Companies Act in 2013 and SA 600 have been concluded in this slide. Basically, auditors must comply with their responsibilities under Companies Act and standards of auditing, which is very basic. Obtaining evidence. Auditors are required to obtain sufficient and appropriate evidence to support their opinion on group financial statements also. Audit procedures must be carried out in accordance with the responsibilities outlined in Companies Act 2013 and related accounting standards. Auditors perform a critical public interest function, especially for public interest entities, highlighting the importance of their role. Responsibilities under SA 600 are interconnected with other related standards in accounting, including SA 200, SA 220, SA 230, SA 240, and so on. So basically, the SS 600 lays down procedures which are mandatory in nature. Interpretation of should in SS 600. The use of word should in SS 600 is not optional. It imposes mandatory responsibility on principal auditor. Mandatory requirement for principal auditors. Principal auditors are required to perform all procedures specified in SS 600, regardless of the word should. Legal framework. These mandatory procedures are in line with obligations set out under Companies Act 2013 and the objectives outlined in Standard of Auditing 200. So, if an if a principal auditor decides to choose an alternative means to achieve the objective of the standard, the slide relates to the that explanation. So, the condition for alternative procedure. Only a valid reason can justify the use of alternative procedure to meet the objective of SS 600. If failure to perform specified procedures must not materially affect the principal auditor's opinion regarding the truthfulness and fairness of the accounts, the principal auditor is responsible for determining if the objectives of the essay relevant to the auditor group financial statements can be achieved through alternative means. As part of the planning and performance documentation, the principal auditor must document the information demonstrating how the objectives were achieved using alternative methods. So here, so what is NFRA's role in ensuring compliance? NFRA ensures compliance with accounting standards and standards of auditing. Section 132 2B and C of Companies Act 2013 mandate NFRA to ensure adherence to accounting and auditing standards. The second role of NFRA is public interest protection. Rule 4.1 of NFRA Rules 2018 emphasizes the authority's role in safeguarding public interest, investors, creditors, and other stakeholders. Establishing high quality standards. NFRA is tasked with establishing high quality standards for accounting and auditing to enhance transparency and reliability. Effective oversight of auditing functions. NFRA exercises effective oversight over auditing functions performed by auditors to ensure compliance and accountability. Objectives of Rule 4.2 of NFRA Rules 2018. It promotes compliance and awareness in accounting standards. Monitoring compliance. Rule 4.2 requires monitoring compliance with auditing standards to ensure adherence. Enforcing compliance. It emphasizes the enforcement of compliance to maintain the integrity of auditing practices. Quality improvement. It suggests the measures aimed at improving the quality of service in auditing. Promoting awareness. The rule focuses on promoting awareness regarding the compliance of auditing standards. Public interest protection. The circular is issued to implement these objectives for the protection of public interest. Effective compliance. It seeks to ensure effective compliance with existing auditing standards through awareness initiatives. The circular emphasizes the existing obligations of statutory audits, highlighting the importance of adherence for public interest. NFRA has observed that a section of auditors is not correctly interpreting these obligations, which necessitates this circular. This circular applies to auditors of all entities as per Rule C of NFRA 2018. This circular is effective immediately to prevent audit failures. The main goal is to restore and retain confidence in the audit of PIEs, which is public interest entities.